Get ready for explosive market action. Nvidia shares have slipped nearly 1.5% today, dropping to $222.97 following a significant 4.4% plunge as investors brace for Wednesday's massive earnings report. Analysts at Visible Alpha are forecasting a huge beat-and raise, projecting roughly $78.5 billion in fiscal Q1 revenue, while Morgan Stanley has already raised its April quarter estimate to $79.26 billion and set a long-term revenue target of about $587 billion. We dive into the details of this critical moment for the chip giant. Next up, we look at the investors are holding their 7. We also examine the massive capital expenditure from Microsoft, Alphabet, Amazon, and Meta, and the wildcard factor of China. Finally, we analyze the full earnings preview, focusing on the data center story, the new Rubin platform, and the export policy outlook. We'll discuss how the implied volatility suggests the market's expectations for this week's announcement, and whether the guidance around China could be a massive revenue boost. Don't miss this deep dive into the future of AI hardware. Tune in to Options Trading Concepts live on Wednesday at 11 a.m. CST for an in-depth look at bullish, bearish, and neutral options trading strategies. Nvidia shares experienced a dip of approximately 1.5%, settling around $222.97, following a 4.4% decline on Friday, as investors anticipate the company's upcoming earnings report on Wednesday. This movement interrupts a recent strong rally that had pushed the stock to record highs. The market reaction follows a broader weakening in equities, with the S&P 500 declining by 0.2% and the Nasdaq Composite falling by 0.5%, as investors continue to monitor global factors including oil prices, treasury yields, and geopolitical tensions in the Middle East. Nvidia's earnings report is poised to be a significant catalyst for both the company and the broader artificial intelligence sector. Wall Street remains intensely focused on Nvidia's ability to maintain its dominance in AI processors amidst expanding industry competition. Investor focus is increasingly shifting towards inference workloads, which are emerging as the next critical battleground in AI infrastructure. Competitors such as Cerebra's systems are attempting to challenge Nvidia by promoting alternative architectures optimized for inference. Simultaneously, enthusiasm for central processing units, or CPUs, is growing as companies seek more cost-effective methods for running AI applications. Key bank analyst John Vin anticipates Nvidia will solidify its position by unveiling standalone CPU server racks at the Computex conference in Taiwan in early June. Analysts broadly expect Nvidia to exceed expectations once again. Morgan Stanley analyst Joseph Moore projects a beat-and-raise pattern, forecasting revenue to surpass expectations by roughly $3 billion and future sales to exceed consensus forecasts by approximately $4 billion. Morgan Stanley has recently raised its April quarter revenue estimate to $79.26 billion and significantly increased long-term revenue projections, estimating fiscal 2028 revenue near $587 billion. The company's data center business remains the core growth driver, with consensus forecasts pointing to approximately $72.8 billion in quarterly data center revenue, reflecting the extraordinary pace of AI infrastructure demand. This surge is underpinned by substantial capital expenditure commitments from major technology giants, including Microsoft, Meta, Amazon, and Alphabet, reinforcing expectations that Nvidia's GPUs will remain central to global AI training and inference systems. Moving forward, investors will be closely scrutinizing Nvidia's guidance concerning production capacity, gross margins, inference demand trends, and potential opportunities within the Chinese market, particularly given ongoing U.S. export restrictions that have limited access to advanced chips. Nvidia's stock is currently trading at record highs, setting the stage for an anticipated blockbuster earnings report scheduled for late Wednesday. The results are expected to be a pivotal moment for the entire artificial intelligence sector, with market focus squarely on the chipmaker's performance and commentary from CEO Jensen Huang. Analysts polled by FactSet have set high expectations, forecasting that the artificial intelligence leader will post earnings of $1.75 per share, driven by sales totaling $78.85 billion. The market is holding its breath, as these figures are poised to dictate the trajectory for AI stocks moving forward. Nvidia is facing significant demand for its artificial intelligence chips, according to recent analysis from Zacks Investment Research. The report, dated May 18, 2026, highlights a strong outlook for AI hardware, suggesting robust demand across the global market. This indicates that Nvidia's position as a leader in the AI chip sector remains firmly established as the industry continues its rapid expansion. The analysis serves as a key indicator for investors tracking the trajectory of the artificial intelligence infrastructure build-out. Nvidia stock has recently surged to an all-time high of $236.54 amid a broad rally in the tech sector. Despite the positive momentum, implied volatility for the upcoming earnings announcement shows a relatively contained range of plus, representing just over 6% of the stock's notional value. Analysts note that while this level is on the lower end for an event of this magnitude, significant movement is still anticipated given Nvidia's standing. The focus for investors centers on several key areas: the data center segment, the advancements of the Rubin Platform, and export policy, particularly concerning China. On the data center front, Nvidia has posted record quarterly revenue of $68.1 billion, a 20% increase from the previous quarter and a 73% jump year-over-year, with data center revenue reaching $62.3 billion, up 75% from last year. CEO Jensen Huang highlighted the exponential growth in computing demand, positioning the agentic AI inflection point as imminent, emphasizing that Blackwell and the new Rubin platform are driving order-of-magnitude reductions in inference token costs. Future growth hinges on capital expenditure, as major tech firms have significantly increased their spending on AI infrastructure. A critical variable remains China. Current guidance assumes zero data center revenue from the region, but a potential $50 billion boost could significantly alter the outlook. Looking ahead, bullish investors are watching for confirmation that Blackwell and Rubin technologies are secured through 2027, which could establish a stable price floor. Conversely, bearish sentiment suggests that if China remains a constraint, or if revenue guidance falls below $86 billion, the stock could face a near-term ceiling. Overall, while revenue and EPS beats are largely expected, any significant deviation from market expectations could drive substantial movement. Market positioning suggests heavy weight on this week's announcement, with analysts advising investors to monitor these technological milestones and geopolitical factors closely.